Welcome to Helping You Thrive with Banterra Bank, a podcast that offers inspiration and information to help individuals, businesses, and communities to thrive. I'm Jennifer Spence, Director of Marketing for Banterra Bank, one of your co-hosts.
And I'm Ben Kraft, Commercial Officer at Banterra Bank, also a co-host. This episode is geared towards physicians as well as hospitals who recruit physicians to our area, because Banterra offers some great banking products specifically for the needs of our medical community.
That's right. We offer these products throughout our footprint, but our team members, Jeremy Lowry and Preston Keller in Salt Lake City, Utah, are the true experts of this market. They understand the specific business needs of physicians and what Banterra offers. So doctors, listen up. Hope you enjoy this episode.
Listeners, today we have team members Jeremy Lowry, Regional Market Executive for Banterra's Western Region, and Preston Keller, Market Executive for Salt Lake City, Utah, with us today. So good morning, guys. Thanks for squeezing in some time. I know you have a busy schedule, but I appreciate you joining us today.
Thank you for your time.
Good morning. Happy to be here.
Yeah. So let's just do some introductions. Let's qualify you guys to speak on the topic we're going to discuss today, which is medical financing. So Jeremy, Preston, you guys have a lot of experience in this field. Why don't you just tell the listeners kind of your background and what you do today and where you're from?
And when you joined Banterra.
Go first.
Yeah, great. So I joined Banterra about 3.5 years ago. Jeremy and I have worked together for a long time, and we started Banterra in the Western region about 3.5 years ago. Prior to that, I had the opportunity to work with a lot of doctors in the banking world. I actually officed at the Intermountain Medical Center in Salt Lake City, Utah for 7 or 8 years, and we had a specialty banking division called Zions Med, and so we had an office inside the hospital and at Ground Zero, and was able to work really closely with physicians and kind of figure out some unique things about physicians and some of the challenges that they face. And during that time, Jeremy and I were able to work together and come up with some specialty products and services for physicians. But I'll let Jeremy kind of talk a bit about his background.
Sure. As Preston said, we both joined Banterra at the same time. We came here with our team. Prior to that, I was Chief Banking Officer at another bank. We were a really fast-growing bank. In fact, for like 3 or 4 years, we were the fastest-growing bank in the western part of the United States. Part of our strategy was medical and focusing on doctors. We needed to do safe loans, and doctors typically are pretty good credit risks. Prior to that, I headed up a department at a larger bank. Preston mentioned Zions. I had about $2.7 billion in loans I was responsible for, and about 135 employees. And Preston and I did work and created some products that were specially designed for physicians, which we use variations of those products today, and they've been used for a lot of success.
Well, first of all, I want to say what a great asset you guys have been to Banterra. I've loved working with you. And while you specialize in maybe physician financing, I think you really specializing in really unique experiences for our customers, really over-the-top service in general. And I think that really sets a bar. I think we do that company-wide, but it's really neat to see some of the things that you've brought to the table. So I just want to say
thank
that.
you.
Thanks.
So I skimmed your 65-page paper on, but I thought it was super interesting from a marketing perspective, because I've never really thought about the different segments of the stages of doctors and the fact of how much money they have to put into school, and then they're barely making it as a residency, and then suddenly they get all this money, and they also don't really have time for financial literacy.
Yeah, so the paper that you're talking about was a part of Pacific Coast Banking School that I attended in Seattle, Washington. Sort of a master's degree in banking. And so my final paper for that program was called Do No Harm, and first Do No Harm, and it was talking about as bankers, we need to make sure that we recognize that physicians have some unique aspects to their life. One of the things that I talk about in that paper is outside of professional athlete, physicians are really unique with how really almost overnight they go from making almost no money to making, in many cases, a lot of money. So they might be a resident or a fellow, and they might be making $50,000, $60,000 a year, and all of a sudden they get done with that training, and now they're making $1 million overnight. And they just haven't had an opportunity to really learn into that money or grow into that money. It didn't take them 5 or 10 years to learn how to acquire that money and kind of adjust to it. It just kind of happens overnight. And so it creates some challenges for them. And so it's been a learning experience for me, and seeing some of the pitfalls that they fall into and talking with them about some of their challenges. But we do talk about the 3 life cycles of a physician, and what we have classified kind of graduation or done with training. So the first 5 years of their training we call early stage physician. And then in the mid stage is kind of when they're in their peak earning years, and then late stage physician would be, maybe 5 years outside of retirement. And what we found is that there are, of course, a lot of similarities during all 3 stages for physicians, but there are some unique needs as they transition through some of those stages. And so we have tried to create some services or products geared to those different life cycles.
So you kind of wrote the book basically on medical financing, or maybe I could say that. I don't know if that's the case, but it sounds like you've got a lot of experience in this. And like you said, when you think you compared it to professional athletes, doctors in a similar way finish up their their residency. They come into a lot of money all at once, and that sounds great, right? But like you said, there are probably some unique challenges that come along with that. So with that, you said we've built some products. What is it that we can offer them to help them navigate these challenges?
I think you were getting ready to speak on that, Jeremy.
Well, I was just going to say, the thing that if people think about doctors, they make all this money, and in the later part of their careers, they tend to be pretty affluent. But what we kind of forget is that they've spent a decade or so, or more in some cases, really being quite, not having much income, and they're in a lot of cases feeling kind of poor. And they've seen, they'll watch, their brothers, their sisters, friends, cousins who didn't take that route, who started working and maybe in their 20s, they were buying cars, they were going on vacations. In their late 20s or early 30s, they're buying homes, and these doctors, in many cases, their spouses, they're just racking up more student debt, living in that studio apartment. And so
they're working 80, 100 hours a week or whatever it is.
Right.
Yeah.
And so, they really have some catching up to do and some pent up demand. And so we have created some products for the early stage doctors that really help them. And it's pent up demand, but I mean, I have a good friend that's a surgeon, and, I remember, he was in his mid 30s, and he was kind of half joking, but it was true. He's like, I'm still using the towels that I got when I got married. I got given as a gift, and I really have to scrub to get dry with these things, because they're pretty worn out now. But that's some almost basic needs for some of these people, especially if they choose to have kids during that time. Yeah. They've really had to sacrifice. So Preston had a really cool idea where, obviously a mortgage product is a great product for them. But Preston had a great idea. This has probably been like 8 or 9 or 10 years ago, for a line of credit. And do you want to talk about that? That's probably one of the most popular things for these new doctors.
Yeah. And it's one of those options that tends to be really popular throughout all stages of the physician's career. So as Jeremy mentioned, the mortgage is very important. And if you think of, we've all heard of the Maslow's hierarchy of needs. They get done with their training, and they maybe had to move across the country a couple of times, and they haven't really had an opportunity to put down roots. So the number one thing on their mind when they finally get that job is getting a house. And, if they've been, they now have what we call a debt worth, meaning that they don't have a net worth. They probably have $500,000 of student loan.
Well, and
debt.
that doctor mortgage loan that we offer, I mean, there's an option with no down payment.
That's right.
It helps them,
up to 100%.
Yeah.
Depending upon the loan amount, but then
up to $1 million, so it's pretty generous.
It's great, yeah. But then, of course, the challenge is, how do you relocate? How do you furnish the home? How do you do everything that comes with that home ownership. And so the doctor line of credit can give them a nice bridge where they can, with even just starting a job and with limited experience on that job, or even a negative net worth, we're able to give them a nice line of credit that they can use to fill in around the edges. And then that comes in handy as they move up that hierarchy of needs. Now that once they get that house, now they start thinking about the next way that they're going to be able to accumulate wealth or to secure their future. Because doctors are always really worried that this thing that I've worked for 10, 15 years to secure could be taken away from me because I am skiing and I get injured and I need to take a disability claim, and disability insurance doesn't really replace the level of income that they're at. Or similar to athletes, they're kind of public figures, and so if they get into an accident, somebody thinks that they just hit the jackpot, and so doctors have an extra large target on their back because they're public and everybody thinks they're wealthy, and so they really need to be mindful of the insurance and making sure that they've got good asset protection, because people want to come after them, but they're always worried about losing that income, which leads them to make different investments or try to buy into surgery centers or to medical practices, and then the doctor line of credit becomes helpful at that stage too.
So just to talk about some of the bullets really fast, the doctor line of credit, that's funding up to $200,000.
Right.
Flexible terms up to 24 months, no required collateral, interest only payments each month. But we also have a physician's relocation loan.
Yep, we do.
You want to talk about that?
Yeah, so we've really tried to create products that address a lot of the needs that they have and really take them through this life cycle. So the doctor line of credit is super flexible, and it's used by doctors in a lot of cases. The relocation loan is obviously used for relocating purposes. We have a mortgage that will go 100% loan to value up to $1 million, 90% to $2 million.
Wow.
So, we have one right now that's getting closed probably today, actually, closing today out in Phoenix, 90% for a doctor buying a home that's about $2 million, about 1.8 or $1.9 million. This is a doctor who's been out of the residency and in practice now for probably 7 or 8 years. And they've gone from the early stage. Now they're more in that middle stage, and they're kind of buying that middle, that move up house. We also allow for a one-time close program. So, because a lot of doctors want to build a home. Doctors are really in their referral business, so they all talk to each other. And so, when one of them builds a home, word kind of gets around, and typically what we see is they come out, they want the line of credit, they might need a relocation loan. They'll do a mortgage for their first house. And then when they kind of move through that from that early stage into the middle stage, then they want to generally build a newer home. So sometimes, like in this case, they're buying a home that was built by a builder, built by Toll Brothers. But in many cases, they want to go through the design process and actually build a custom home. And so we have a one-time close product for that. And then kind of the next stage that they get into is they want to buy into their practice. And so we have practice buy-in loans that we do. And we have, and then many times if they're in a smaller practice, they'll want to buy or build their own office. So they own real estate. To Preston's point, they get concerned because, if you're an orthopedic surgeon and if you get hurt, you can't be an orthopedic surgeon anymore.
Right. Yeah.
And so those are real concerns. As they get into later stage, they want to start making more investments, and oftentimes that could be in real estate. It might be, it could be rentals, it could be industrial buildings, it could be, it could be any number of things. But we've really tried to create products that get them all the way through there and help them to have some financial security and just options, I think is a good way to put it. It's for us, it's fun to see these doctors that we helped, buy into, a large group or a good group, 7 or 8 years ago, moving on and getting into these different stages.
Mm-hmm.
What I think I like about it, and the theme I'm getting from everything you're saying, is that it doesn't necessarily have to fit within a certain box for us to be able to work with a certain individual or fit them into a certain product. We've had the ability to customize a product based on the needs of these individuals and build something that really works for them in their particular situation. So they might not have to have that 10 or 20% down payment to buy a home. They might not have to wait until they build equity in order to access a line of credit. And so I think that really speaks to our flexibility in being able to customize these products for these certain types of individuals and meet them where they are and what they need, right?
Yeah, I mean the argument for extending this kind of credit to doctors is that generally their cash flow, they live in a world where, generally speaking, there's unlimited demand for their services.
Mm-hmm.
Unlike other professionals like us, we have to go and find business, if that makes sense. But if these doctors are willing to spend another hour, there'll be more people who need their services. Mm-hmm. And so because of that, it allows us to be a little more aggressive in some of these areas.
Right.
Yeah, one of the points that I saw in your paper is that and it's common sense too if we think about it too, is their time is so precious. It's such a demand. Even before they're established, going through school and residency and everything else. And so when there's a banker that has taken the time to understand their specific needs, there was a lot of testimonials on why that really mattered to them.
Yeah, they really value specialization. That is their world. You don't really see a lot of generalists, and so for them to have a bank and a banker that really understands their unique needs and challenges really resonates with them, and their time is one of their most important commodities because they just have so little of it. And if they're not working with a patient, they really want to be with their family and not stressing about how are we going to take care of this home purchase or whatever challenge they might need some help with.
And that kind of goes to like the service delivery model too. Do you want to kind of touch on what the way that they need to be provided that service and that access to a bank? And how hard is it for them to walk into a bank to do a transaction?
Yeah, it's not going to happen.
It's impossible.
Yeah, it's again they need to be meeting with patients or with their family. So if they need to, say, open up a new account, the idea of going into a traditional bank and taking their time to do that is not going to be something that they're going to be able to do. Maybe they can do it on the weekends, but they're probably not going to want to do that. And of course, most banks are not open on the weekends. If they need to do a wire transfer, they're meeting with patients all day long, or they're in surgery from early in the morning until the afternoon when the bank is closed. Some of these surgeries will last 10, 12 hours, and so we need to remove that stress off of them and be able to help them be able to manage things remotely. So we've created a whole service model, and again, the products are wonderful, but if you can't deliver on the service or understand that's great. You've got a nice checking account, a nice private banking offering, but how do you deliver that to them in a way that actually makes their life easier? So, we have the ability to, for example, send wire transfers remotely where they don't need to come into the office, or we can open up new accounts for them without them needing to come into the office. So that time is important for them. And just real quick, I wanted to tell a story about a point that Jeremy made. I had a physician one time that he was a little on the edge for us doing a loan for him, and I said, "Hey, we'll go ahead and approve the loan and make that for you, but I need you to make more income." And he came back about 2 weeks later, and he said, "Hey, you'll be really proud of me. I made an extra $25,000 over the last 2 weeks." And I said, "How in the world did you do that?" He said, "Well, I just took on a couple of extra cases, and I'm planning to, instead of taking 12 weeks of vacation, I'll only take 8 weeks of vacation this year." So to Jeremy's point, they have the ability to ramp up their hours and take on more cases and really have some flexibility with the level of income that they have. So outside of death, disability, and divorce, their income tends to be very stable. And I guess recently we might add the P there, which would be the pandemic, which was kind of an interesting experience to go through with some.
Yeah, you touched on the technology, and I know that that's a very important point for any banking, but especially Banterra has put a lot of effort into that, and you guys have really pushed the bar for us on that too. So it's not only benefited our doctor customers, but some of the things that you've pushed for that we've been able to accomplish for those conveniences is super helpful.
We're fortunate. Banterra believes in technology. There's a lot of banks that kind of wish it was still 1985, if that makes sense.
Yeah. We do for the music,
which was a great time. Yeah, Van Halen's awesome, right? But Banterra, much more so than other banks of its size, Banterra is much more forward-looking and interested in investing in technology, which is great. And I think that I think Banterra recognizes as it grows into other markets, it's not just physicians that are in this position, but anybody who's living in a market where you have millions of people there. It's hard to have enough branches to be convenient for them, but you look, and technology can make it so you can, people nowadays want to bank on their phone. They want to bank on their computer, and that's what we're striving to provide.
And fast.
Outside of that, I think Banterra's mindset and really understanding of the physician world is helpful as well, even from a credit perspective, because there's a lot of banks talk about having something unique or special for physicians, and then when you click on their link, it basically wraps you back around to their
checking savings.
Yeah, the same products, or when they start to go through the process, they need to meet all of the same hurdles or have the same challenges as every other borrower are fitting in that box. Thank you. And Banterra really understands that, for example, physician practices are probably going to distribute most of the income to the physicians and are probably not going to show as much income as a typical business might. And for many banks, they say that they understand medical banking, but that would be kill a deal right there, where Banterra understands how that income is going to flow.
We didn't talk about private banking. That's another one. You want
to? And private banking is really designed for high earners, for business owners that have a good business, that they're doing well, for professionals. So they might be physicians, they might be attorneys, they might be architects, could be CPAs, but just really for high earners. And everybody who's in that situation, to a greater or lesser extent, is in that same boat that Preston described for physicians, where they just don't have a lot of time. Right. And for successful people, there's been many studies, but for success, if you ask people, the higher you get in net worth, you ask people what's their most prized asset, and time becomes more and more and more valuable and more important. And that may have to do with, as people accumulate money, they're getting older, and they're recognizing that they don't have as much of it left. Yeah. But time is a big deal, and so finding ways to save them time, finding ways to be convenient for them, finding ways to, as Ben said, meet them where they are, is really the point behind it. So we do have a really great private banking program. We have a great checking account. We have a great money market account for it. We do some really interesting stuff in the mortgage space that's for folks that it's really designed for people who are in that space where they maybe are building a home. We have a good one-time close product, and we'll do 80% loan to value up to $3 million loan amount. And so we have some things that are designed to try to make their life a little bit easier. But in the private banking space, it's really around that service model of trying to understand these people. They're time pressed. They don't want to walk into a bank branch. I mean, I live in a little cul-de-sac, and we have an HOA, and I was the treasurer last year, and thankfully I'm not the treasurer this year, but I had to hand it off to the guy who's the new treasurer, and get signature cards signed, and so they banked at a credit union forever. I need to move them over to Banterra, but we went in there on an afternoon, and we walk in the door, and there's a line that's like 15 people long, and
surprised,
and it's just like, oh wow, okay. For a private banking client, we would want to have a signature card that they could sign with DocuSign, and be in a situation where, you don't need to come to the bank branch. We'll just handle that for you.
Right. That's where everything's going. Yeah.
Right. And so, and that's what that clientele really wants. And I think it's what all of us want, whether we're there or not.
Yeah.
And
leverage technology.
Outside of that, I think people like that really value a relationship and expertise and somebody that they can call or text or email, and they know who they are, they know their story, and they value that relationship as opposed to walking in as just one more person in line.
Yeah, well, we did some when we were at a bigger bank. We did some polling of our clients, and what the affluent client wants, the prepping client wants, is they want a technology enabled relationship, which means they want to use the technology, but when it doesn't work, they want Ben's phone number, they want Preston's phone number, they want Jeremy's phone number, they want Jennifer's phone number, and they want to call you. They don't want to call a call center. They don't want to.
We all want that, really, don't we?
Yeah. They want to call the person they know, and then but they would prefer to use technology first, generally.
Sure. Ben, I don't know if you know this, but I think on the whole time and being sensitive of doctors' priorities, your business development events are just spot on. I mean, it doesn't mean that you don't have a golf tournament, because you do, but you have things for families. You want to talk about, the movie theater and the different things?
How we build those relationships with you were talking about. What are some of the things that you do out in your region?
Well, as Jeremy said, we try to meet our clients where they're at. And going golfing on a Wednesday afternoon with a physician, it's not going to happen, especially not on short notice. If you can give them a couple of months' notice and they can take the time off of their schedule, that's great. But I had a physician one time tell me that vacations are very expensive for them. And I said, why is that? And he said, well, because not only do I have the cost of the vacation, but I have my time away from
making money.
Making money.
Yeah, time value of money.
So it's extremely expensive. So we have to meet the physicians where they're at. And again, if they're not with their patients, they usually want to be with their family, or they want to be doing something fun or exercising or doing something. So the movie events have been a really great option for us, where on the weekends they're able to come in with their family and have a nice experience. We've also done some theater events that they enjoy coming to, where they can bring their spouse or a plus one and come and relax and enjoy the evening. And
pool parties.
Nice. Yeah. And it's great because, as Jeremy said, they're in the referral business. And so they say, oh, that's Dr. So-and-so. I refer them patients all the time, but I've never actually met them in person. And so it's a nice opportunity for them to be able to relax in a nice environment and be able to meet other people in the industry as well.
I think it's a great partnership, too, that we have with the Utah Medical Association. I don't know if you want to talk about that at all, but I think that's just another smart way to, target this market and accommodate what they need. And you can really hear from them first on through that organization of how we can even improve our products, maybe.
I think one of the fulfilling things about doing banking is supporting the medical community. Any community that has a strong medical presence, the stronger the medical presence, the better it is for your community. And so, these products that we're talking about, it's great for the doctors and it's nice for the bank because they're good clients. But, it really creates a positive environment in the community for these doctors, and it makes it be a welcoming place for them. And the Utah Medical Association is a really good association that does that as well. And so we're really thrilled to work with them and to support them. Preston has worked with them for a really long time, probably almost 20 years, 17, 18 years. I'm a little bit less, probably 8 or 10. They do a really good job of advocating for doctors, and I think that does a lot for all of our communities. It's interesting as we, as Banterra looks at new markets, or really anybody looks at new markets. One of the things they're interested in is how strong is the medical community, and I think it's almost a bellwether for the local economy. I don't think I've ever seen a community that has a strong medical community that isn't a thriving, prosperous community. And so it's really it's a way that we're able to help, our local market. But I think the products help all the markets that we're in to support that.
Speaking of new markets, Banterra has roots here in Southern Illinois, and for a long time. and now we entered into the market out west not long ago, and you guys were a big part of that. I was just wondering if you could share a little bit of the story about how you came to Banterra and what it's been like bringing Banterra to the western region.
Yeah, absolutely. Do you want to talk about how we came to Banterra?
No, go ahead.
Yeah, I should say. Yeah.
Well, I wasn't interested in moving where we were. Preston got to know Jeff May and Everett a little bit actually we used to we banked a lot of title companies. We probably had 300 million or so or more in title company deposits at the time, and I think you were at a title company conference and ran into somebody that knew them, and they were interested in whatnot. So Preston was really interested in talking about making a change. And I was probably not so much, but he talked me into it. And so we had a sit down with Jeff May, and I mean, he's just a charming guy. What can I say?
Yeah.
Jeff
May's our president and CEO.
Yeah, president
for the
CEO.
listener.
Yeah, he's the CEO of Banterra. He's a charming guy, and no, but I think that it was what we were working at a bank that was working to go public or get sold, and so the thought of working at a bank that has those deep roots was really appealing. That was family, that's owned by people was very appealing. And so so we were looking, and we also were looking for a fit. Kind of from a strategic perspective in the Salt Lake market. Salt Lake has all the big banks. So the Chases, the Wells, the Key Banks, the U.S. banks. Almost most of the big regional players are there, and it has a large bank called Zions Bank that's the local bank. But Zions has grown beyond being a community bank. They're a 70 or $80 billion bank now, maybe even bigger. And so they're not a local bank anymore. They have to. They're regulated in a way they have to be a regional bank. And so really, what our market was missing was a bank that's of Banterra size. There had been a bank that was that size that got acquired by a regional bank, and they kind of lost that touch. And so we recognized there was an opportunity for a bank. What I always say about Banterra is, we're big enough to be relevant, but we're small enough that our clients really matter to us. We're small enough that people who really care, and we can have that local touch. And so, so we recognized there was an opportunity there, and we recognized that, that really the people the leaders at Banterra and all the folks are good people. And so that was for us, that was an opportunity to bring that in. So it's kind of refreshing, honestly.
Yeah.
Because if you're working with a really big bank, you don't always, it's not that the people are bad, but it's, they have to be a kind of a machine, and it has to fit in a box and all that.
Well, I think we have the lending capacity that they need, or at least a majority of it. But I think it's impressive too that our chief banking officer, Christina Scott, and Jeff May, our CEO, and others are constantly out in your market.
Yeah.
That says a lot for them to come to their site, right?
Yeah, for sure.
Banterra has really invested in the Salt Lake market and the West, and that says a lot to our clients, and it's really helpful. And as we were looking at making the change, one of the things that I was contemplating was the ability to still take care of our clients and provide that high level of service and a unique experience. And it was getting harder and harder, as Jeremy said, the bigger banks, they have a purpose and a time and a place, but they've had to really start to limit what they can actually do for their customers. So they can have all the lending capacity in the world, but what good is it if they can't really take care of their clients, or if they can't really deliver a service experience that really caters to that higher end client. So the community bank, a model where Banterra truly cares about the community that they're in, and and the folks that they serve, was really refreshing and was really interesting to us.
And it's been really well received. In the Salt Lake market, we came in fresh, and it's been really very well received. I mean, we've grown a lot. I think the Western region, this month just passed over $400 million in outstandings, which is pretty good. And we'll continue to have strong growth. In Arizona, we said to get some alignment with some of the folks we had there, and they've been doing really well also. Mm-hmm. There's a real community bank in a big market can be a real bright spot for the right clients, mm-hmm. And that's what Banterra's been.
Yeah, great. Well, I'm sensitive for you guys to be able to make an airplane, a flight. But Ben, you want to ask him a fun fact or
Sure.
anything?
Yeah, I want to be mindful of your time, but one thing we like to ask all of our guests before we get done is what are you into? And that could be anything. That could be a book. That could be a movie, a TV show, podcast, music. I've learned Preston might be more of a podcast guy. Maybe Jeremy's more of an 80s rock Van Halen type of guy. But take that any direction you want. What are you guys into right now?
You have all kinds of interests, so you go first.
Jeremy's going to think, yeah.
Yeah, I'm like, oh man, that's that one interesting thing.
I do love continually learning, so I do listen to a lot of podcasts and books, most of them at 2 times speed or more, because I have so many to get through. But one of my favorite podcasts right now is the All In podcast, and also enjoy some health and fitness podcasts. But cool. I like mountain biking and running and spending time with my family, doing travel. Travel is the thing that I really love.
Very nice. Jeremy?
I have 4 kids, and it seems like whatever they're into is what I'm into.
Sure.
So I guess my family is probably but most of my free time goes, if that makes sense.
Oh yeah, I love my family too. Thanks, Jeremy.
He said family.
Preston way undersold himself. He is like a Renaissance man, like this guy with all these interests that's doing all these things. He's constantly, doing something new and exciting, and so he way undersold himself.
There's only so much time, though, right?
He's way of the two of us. He's the way more interesting one.
I don't know about that, but I'm so glad you guys were able to squeeze this in.
Thanks.
So
Thank you.
it was
Appreciate
very informative. So
Yeah, thanks for joining us, guys.
No, thank you. Appreciate it.
To our listeners, don't forget to subscribe to Helping You Thrive on your favorite podcast platform, or watch the video on Banterra's YouTube channel. Also, please tell others about our podcast by sharing on your social media or leaving us a review. Follow Banterra Bank's social media for various insights, including promotions and this podcast. Our podcast today was recorded at Walker's Bluff Casino and Resort in Carterville, Illinois, and produced by Union Street Arts and Banterra's marketing department. You can find more information on Banterra at our website, banterra.bank. Thanks for joining us today. Banterra Bank, member FDIC.